All right, strap in, everybody. We're going deep today, like really deep, into something, honestly, a lot of you have been asking about. U.S. economic policy and how it's been, well, kind of shaking up the markets.
Yeah, it's been a wild ride for sure.
So to help us make sense of it all, we've got a mountain of insights to dig through, and they come from Brian Kim.
Oh, I know Brian Kim.
Yeah? He's a financial expert. You might have seen him around. He's been making waves on Korean financial YouTube channels lately.
Really smart guy. Very interesting takes.
Yeah, and you know what? The thing about this deep dive is it's not going to be your typical, dry econ lecture.
No, not at all.
What we're really aiming for here is to help you guys understand what's really going on, like beneath all the headlines and the financial data.
Right, like what's the story behind the numbers?
Exactly. And because once you have that, you can, well, make smarter decisions.
Absolutely. Knowledge is power.
So get ready to ponder some pretty thought-provoking questions, like, is the U.S., pulling strings behind the scenes, deliberately messing with market conditions to get what they want?
Like a puppet master.
Kinda, yeah. Or what about that massive U.S. debt? Is there, like, a secret strategy behind it?
That's a good question. It's a lot of debt.
It is. And how's all of this going to affect the global markets? And, more importantly, how's it going to affect you?
$1 million question.
So first things first, let's talk about, the elephant in the room. U.S. debt. It's huge, right? Like, astronomically huge.
Absolutely massive.
But what if, and hear me out here, what if the U.S. is actually, using this debt on purpose?
Deliberately.
Yeah, strategically.
Interesting.
Well, that's exactly what Brian Kim thinks. He says the U.S. is basically playing this game of keep away with its debt.
Keep away.
Like they're betting that the economy is always going to be one step ahead.
I see. Like they're outrunning it.
Exactly. So how does that even work?
Well, imagine, right, you're a country and you've got a credit card. As long as your income grows faster than your balance, you're technically, doing okay.
Right, you're not drowning in debt.
Yeah, and that's the whole idea behind this nominal growth rate thing that Kim talks about. The U.S. is shooting for a growth rate of like 3-5%, which, by the way, is higher than the average interest on their debt.
Oh, I see. So they're borrowing cheaply and reinvesting it.
Exactly. They're pouring money into areas that'll, hopefully fuel even more growth down the line.
So it's like using debt as rocket fuel for the economy.
Pretty much.
But, aren't they worried about those interest rates, like, catching up?
It's definitely a gamble, yeah. And to be fair, Kim acknowledges that. He knows that if interest rates suddenly spike or if the economy, stalls out, things could get messy.
That makes sense.
But for now, they're going all in on innovation. Like, they're pouring billions into things like AI and semiconductors.
Through initiatives like the CHIPS Act, right?
Exactly. And it's not just about, staying afloat. It's about, like, dominating the future of technology, especially with China, breathing down their neck.
Oh, yeah, big time.
So it's a total power play on the world stage. And that's where the Federal Reserve, the Fed, comes in.
Ah, yes, the Fed. The puppet master's puppet master.
Well, kind of. They have this crazy balancing act. Like, they have to keep inflation under control while also making sure there's enough cash flowing to keep the markets, happy.
So the Fed is like constantly juggling chainsaws, basically.
Pretty much. But how are they even managing to keep all those balls in the air at once? Well, Kim points to this thing called the reverse repo facility.
Reverse repo facility, what's that?
It's basically a fancy way of saying the Fed can, like, soak up extra cash from the market to, stop inflation from going crazy.
So they're like a giant sponge.
Exactly. Soaking up all that excess liquidity.
Okay, so I think I'm starting to get it. The Fed is walking this tightrope, trying to tame inflation while also, subtly nudging the economy in the right direction.
That's a great way to put it.
But the question is, how long can they keep this up? And how does all of this, high-stakes U.S. economic maneuvering actually affect, regular people like us?
Oh, that's what I want to know.
Well, that's where things get really interesting.
Yeah.
And that's exactly what we're going to be diving into next time. So get ready to see how these global forces might be hitting closer to home than you think.
Can't wait. This is getting good.
Oh, it's about to get real, my friend. Real.
Oh.
All right, welcome back, deep divers. Last time we were wading through the murky waters of U.S. economic policy, trying to wrap our heads around strategic debt and all that.
Yeah, and how the Fed is basically juggling chainsaws, trying to keep everything from falling apart.
Right. And remember, we ended on that cliffhanger. How does all of this high-level stuff actually affect you and me, the average Joe?
Yeah, like, does it even matter? Should we care?
Well, I think we should. And I think that's why a lot of our listeners are tuning in. They want to know how to, like, ride the wave, not get wiped out.
Totally. And luckily for us, Brian Kim has some really great insights. He says smart investors should look at the market right now and, well, not freak out.
Okay, easier said than done, right?
Yeah, but hear me out. He says instead of seeing all the volatility and risk, we should see opportunity.
Ooh, I like the sound of that. Opportunity. But where exactly are these opportunities hiding? Give me the goods.
Well, remember how we talked about the U.S. pouring money into, like, specific sectors, the ones they think are going to be huge in the future?
You mean like AI and semiconductors? Those
Yeah.
tiny little computer chips that are in everything these days.
Bingo. Kim says to look for good companies in those areas, the ones that are poised to, like, really benefit from those trends.
So we're not talking about, like, chasing meme stocks.
Oh, no, no. This is about finding companies with solid foundations, strong leadership, and products that are actually, innovative.
Right, companies that are actually making a difference.
Exactly. In AI, that could be companies developing, cutting-edge technologies like those machine learning algorithms that everyone's talking about, or even the companies that are building the data analytics platforms, the ones that are crunching all that data,
Okay, so for AI, we're looking for the brains of the operation.
basically. And then for semiconductors, you'd be looking at like companies involved in the whole life cycle of the chip, from manufacturing to design to even the specialized equipment that's used to make them.
It's insane, right? How much those tiny little chips impact our lives.
Totally. And as demand keeps growing, those companies are probably going to see some pretty impressive growth too.
Okay, so AI and semiconductors. Got it. But even if those sound promising, even if we're like, yes, that's the future, we still have to remember the golden rule of investing.
Right. Don't put all your eggs in one basket.
Exactly. Diversification. So what are some other, like, avenues investors might want to explore?
Well, Kim suggests, thinking outside the box a little bit, looking at international markets, particularly the ones that have a lot of growth potential.
So places like India, Southeast Asia, Latin America, the up-and-comers.
Exactly. Those markets often offer what's called attractive valuations, which means you might get more bang for your buck.
Oh, I like the sound of that.
And it also gives you the chance to, like, tap into trends before they hit the mainstream.
Be ahead of the curve. I like it. But we do have to remember, right, that investing in emerging markets comes with, well, risks.
Definitely. We're not giving financial advice here. Always do your research.
Right. This is just like food for thought.
But I think what Kim's saying is really helpful. It gives us a way to think about how to position ourselves, given all these global trends, like how to align our investments with the forces that are shaping the future.
Okay, that makes a lot of sense. But thinking about the future,
Mhm.
you know, it can be kind of scary, right? All this stuff about U.S. economic strategy, AI taking over the world, everything changing so fast.
Yeah, it can be overwhelming.
So how do we even begin to prepare for a future that feels so, I don't know, unpredictable?
That's a great question. And Kim actually has a really interesting take on that, too. He talks about the importance of continuous learning and being adaptable.
So not just burying our heads in the sand and hoping for the best.
Definitely not. He's talking about actively learning new things,
Yeah.
keeping our skills sharp, being open to new technologies, like becoming lifelong learners.
I like that. Instead of feeling overwhelmed by the future, we can choose to see it as an opportunity to, learn and grow.
Exactly. And the more we understand about what's happening, the better equipped we'll be to, not just survive, but actually thrive.
Thrive, that's the word. Okay, before we get too carried away with all this future gazing, we've got one more thing to unpack from Kim's analysis. And it has to do with, remember that mountain of U.S. debt?
Oh, yeah, it's back. The elephant in the room.
Well, it turns out there might be more to the story. And this is where things get really interesting. Okay, deep divers, we're back. Part 3 of our U.S. economic policy saga. And we've saved the most mind-boggling bit for last. Remember that mountain of U.S. debt we've been talking about?
Oh, yeah. It's like a lot of debt.
Well, get this. Brian Kim says the U.S. might not actually be trying to, reduce it, like in the way we normally think.
Really? So they're just going to let it keep growing?
Well, it's more like they've kind of embraced it, like it's a tool or something, a tool to like shape global financial conditions.
Wow, that's kind of wild. A tool.
I know, right? It's
Oh,
a pretty crazy idea.
yeah.
But how could debt be a tool? Like, break it down for me.
Okay, so picture this. Over 70% of U.S. debt is held by, U.S. citizens and institutions.
So Americans are lending money to their own government.
Exactly. They're basically financing their own country spending. And here's the thing. When the government pays interest on that debt, the money goes right back to Americans.
Oh, okay. So it's like this big financial circle.
Yeah, like a recycling system, which helps explain why the U.S. can have so much debt without, everything collapsing.
But wait, if they're not trying to actually reduce the debt, doesn't that mean it could just like grow forever? Where's the limit?
Yeah, that's the billion-dollar question. But Kim says the U.S. seems okay with this whole approach, as long as a couple of things happen.
Okay, lay it on me. What are the conditions for this whole thing to work?
First, the U.S. economy has got to keep growing, like faster than its debt is growing. Remember that nominal growth rate we talked about?
Yeah, got to outrun those interest payments. What's the second condition?
Most of that debt needs to stay in the hands of, like, American investors. If, foreign investors get spooked and start selling off U.S. bonds, things could get really messy.
So it's a balancing act. Keep the economy growing and keep investors happy. Sounds kind of risky.
It is. It's a high wire act for sure. But then, get this. Kim suggests the U.S. might actually be, like, creating certain economic conditions on purpose.
Wait, hold on. You're saying they're, like, deliberately causing problems? Why would they do that?
Well, think about it. When investors get nervous, where do they run to?
Safe havens.
Yeah.
Like U.S. Treasury bonds.
Exactly. So it's like they're almost encouraging investors to buy up their debt, which lets them borrow more at lower rates.
That's pretty sneaky.
Yeah, it's a controversial theory, for sure. But Kim does point to some, interesting evidence, whether it's intentional or not. It's clear that the U.S. has a pretty unique role in the global financial system. But it's a risky game they're playing, with some potentially big consequences.
Wow. This whole deep dive has been pretty wild. We've covered so much ground. Strategic debt, the Fed's balancing act, and now this whole idea of the U.S. like orchestrating economic conditions.
There's a lot to take in.
It is. But remember, the goal here is to, help you understand what's going on so you can make better decisions about your money, your investments, your future.
Exactly. And, the future's always changing. But if we stay informed, keep learning, we can adapt and figure it out.
Absolutely. So stay curious, keep those brains engaged, and we'll catch you on our next deep dive. Thanks for listening, everyone.